That's the real big stick that can be used against South Africa. What I'm concerned about is exactly that. We've got 2 million civil servants in South Africa. We've got 28 million people receiving grants from the state. We cannot afford this. That is the reality.
To give people context, the government's been adding to the debt pile at a rate of about R1 trillion over 3-year cycles. That's a lot of money. That's a huge amount of borrowing.
But we have in the meantime as a government that wants to expropriate property. They want to, let's use the right word, wants to steal private sector properties, because that's what they plan, that's what they said they want to do.
So a fiscal crisis can lead to better outcomes.
Eskom is a good example of that, because previously the private sector was not allowed to generate electricity, and then gradually the limits on how much they can generate was increased, and now it's unlimited. But that is a potential scenario. The bond yields spiking for whatever reason, and that's going to be really bad for South Africa. And we're heading for that.
South Africa is currently experiencing some improvement in economic and fiscal conditions. Is this real? Is this sustainable? Or is South Africa still on a problematic structural trajectory? And is it at risk of perhaps a fiscal crisis down the line? My name is Russell Lamberti, Director and Chief Economist at Sakeliga, and I'm going to address these questions today with my guest, Dawie Roodt, Founder and Chief Economist and well-known economist from the Efficient Group. Dawie, great to speak to you about these burning questions. I'd like to start by contextualizing what's going on at the moment. Just yesterday, the fiscal trajectory, and Mr. Gorangwana, the finance minister, was described as the new Trevor Manuel of South African finances. It's being billed as a fiscal turnaround. And everywhere you look, there's optimism about this economic recovery that's seemingly underway. And there's a sense of change in the air, that what's been a very stagnant economy for a long time, that there's green shoots and that things are emerging in a positive direction. I want to contextualize this. I want to get your insights into how you are reading what's going on at the moment, and contextualize whether this is real and sustainable. Is this just a short-term recovery that we're seeing? What is the structural backdrop to this recovery? Help us understand and get context as to what we're actually seeing at the moment.
Thank you, Rachel. Thank you. Very nice talking to you, and thank you very much for the invite. Yeah, I think what you've just described is how we became accustomed to a very, very low bar in South Africa. Even if you listen to the Minister of Finance at the medium-term statement, his new estimates on economic growth is only for 1.2%. Population growth is about 1.5%. And all of a sudden, we're all applauding this Minister of Finance because things have changed around. This is a new dawn, as they say. That certainly is not the case. But let's not take away some of the positive things that's been happening in South Africa. There are a few positives. I think one is the lowering of the inflation target. That is certainly positive. Another one is that the SARS is doing a bit, but depending on your point of view, of course. But from a fiscal point of view, SARS is doing really a good job. They are really squeezing the economy to get as much as possible money out of the economy.
Maybe too good a job.
Perhaps too good a job, and maybe we can talk about that, because they got more money. The Minister of Finance gave them more money to collect even more taxes, and I don't think that's necessarily a good thing. And maybe we should talk about the morality of taxes as well. But certainly there are, at least it seems to me as if the slide that in which the South African economy has been sort of slow, the slide has been slowing down a little bit. There are some of the fiscal numbers that look a little bit better, but what really concerns me is that if you look at economic growth of 1.2% and thinking this economy has turned around, that certainly is not the case. We need economic growth much, much faster. But the bar is so low, and that is something to be concerned.
When we talk about the fiscal numbers looking a little bit better, let's give a little bit of context to that, because how much better really is it looking? And again, perhaps it's off such a low expectations. Yeah. To give people context, we've been adding to the government's been adding to the debt pile at a rate of about R1 trillion over 3-year cycles. That's a lot of money. It's a huge amount of borrowing. What are we getting for that borrowing? What are we seeing? What kind of investments are being made with that borrowing? We know that this is really just keeping things afloat. This is keeping social grants going. This is keeping current expenditure going. So we've been adding a huge amount to that debt pile. What we've seen in this latest budget is slightly better growth forecast, therefore slightly better forecasts of tax increases and therefore slightly lower forecasted deficits, but still big deficits, still accumulation of debt, still not a fantastic trajectory.
Yeah, in fact, there was no increase in the economic growth forecast. It was actually a reduction. If you look at the Minister of Finance, he actually started off the year by saying he thinks the economy is going to grow at 1.9%, and whenever new data came out, it's very clear we're not going to get to that. These most recent numbers, 1.2% economic growth, I don't think we're going to get to 1.2%. But you and I as economists, what we do, we look at things like, for example, fiscal deficit to debt. We look at the debt levels deficit to GDP or debt to GDP numbers. And to put it in perspective, each one of us on a per capita basis, you owe more, 100,000 Rand more than what you think you owe, because that's the debt to GDP, roughly. We pay billions of rands on interest on state debt. It has become unsustainable, and we can go into that a little bit. But you know, all the numbers that we're going to talk about now, Russell, those numbers are actually all wrong. And the reason why I say so is because in the past, there are three levels of government, if you like. You get the local authorities, you get the state-owned enterprises, and you get the national accounts of the Minister of Finance. As economists, we usually refer to the national accounts. We talk about fiscal deficit and debt numbers and revenue and expenditure and interest and that sort of stuff, referring to what the Minister of Finance usually talks about. But what's been happening in recent years in South Africa is that the local authorities, they can't wash their own faces anymore. The majority of them, in fact. So they're getting a huge amount of money from the Minister of Finance, and their own debt has been increasing quite substantially recently, and so there's some major issue fiscal.
And that municipal debt is not reflected on
not at all.
The headline debt numbers.
No, that is not included. And in the meantime, they're standing outside of the door of the Minister of Finance and also want some more money. The same goes to the state-owned enterprises. In the past, the state-owned enterprises could stand on their own feet financially. They can't do that anymore. So you and I, we look at the fiscal numbers and we compare it over time, and Solicitor is up and down or whatever the case. But the definitions have changed, actually. If you really want to be honest, you have to include the local authorities. You have to include the state-owned enterprises, because they've become the problem of the Minister of Finance today as well. And if you do that, then debt, currently standing at close to 80%, is actually well in excess of 90 or 95% of GDP.
I think this is a hugely important point, and this is what gets called, I think, in the budget contingent, at least part of this, the state-owned enterprises gets called contingent liabilities. In other words, a liability that is contingent upon some events happening, maybe the state-owned enterprises reforming their finances, but if they don't, and if the municipalities don't reform their finances, most investors believe, and have been led to believe, and I think correctly believe, that the national government, the state itself, is essentially liable for those debts, and will stand and will backstop them and will stand behind them. And as a result, as you say, the debt pile is actually a lot bigger than it looks.
And that's not all. I mean, there are many other institutions, like, for example, the Road Accident Fund. I mean, that thing is running a huge actual deficit at the moment. And that should technically be included in that. But let's ignore that for a moment. Let's sort of stick with the traditional way of looking at the fiscal accounts. Then we're still running a fiscal deficit of close to 5%, 4.8% or whatever, relative to GDP. We're still running debt levels, and that's increasing. That has become unsustainable. But again, give credit where it's due. We are running a so-called fiscal primary surplus at the moment, which gives a bit of a clue of the way that the Minister of Finance is running the fiscal accounts. And that tells me that at least he's trying to keep back on state expenditure.
Let's quickly talk about this. So the primary surplus, what does that mean? So that means that you are spending less than you are taking in taxes before accounting for interest payments and interest costs. Now, interest costs have risen so much. They've risen up to about 400 billion Rand a year. So once you factor in interest costs, you end up still running a huge deficit. So in essence, what's going on right now is that the government is borrowing money to service interest. To service debt, if you look at it in that way. Now, but the point is that what's being proven by being able to run a primary surplus before you factor in the interest costs is that you can actually spend on government less than you take in taxes. It doesn't fall over. The state doesn't collapse. Things don't fall over. The economy doesn't collapse. Things kind of can carry on, and it's actually proof, in a sense, And this is where credit must be given to the minister that you can run a surplus.
Yeah, but let me. That's true. We're running a primary surplus at the moment, but the reality is we're still running a deficit. Correct. The reality is that debt keeps on going up, and that has become unsustainable.
This year, about 350 billion rand is the deficit. Yeah. It's forecast to come down over the next couple of years. That's a forecast. It looks better. Looks like the deficit is shrinking, but that's just the deficit shrinking. You're still adding to the debt pile. And if you look at the big picture numbers, as I say, about R1 trillion new debt will be added over the next 3 to 4 years, depending on the outlook. And that adds to the debt pile, as you say, per person in South Africa. If you had to take the national debt per capita, it's about 100,000 rand that everyone owes. And really what that becomes, and this is where we can think of the morality of deficits, who's liable for that? Ultimately, in the long run, it's future taxpayers, unborn children, people who are going to inherit a debt that was created by previous generations.
You're touching on something very important here, because if I listen to some economists, they tell you that the tax burden is X% of GDP, for example. Now, the total state expenditure is currently about 33% of GDP, while the tax burden is, you can correct me, about 28-29% of GDP, which is actually incorrect, because the tax burden is equal to state expenditure, because that deficit is nothing but postponed taxes. Somebody's going to pay for that, and your kid's going to pay for that one day. And the more we postpone taxes, the bigger the tax burden will be on our kids eventually, and on the economy going forward.
So Dawie, we've put into context now, we've seen some uptick. Let's just, before we move on from this point, I just want to really be clear. This slight improvement in the fiscal numbers is reflective of something that's going on in the economy at the moment. Some of it is really good news, and you might even call it somewhat structural news, in the sense that there's some improvements once again in transport logistics. There's been some improvement in the Eskom in Eskom output. How sustainable and long term that is, but for now that's happening. Then there's what we might call cyclical tailwinds that are a little bit lucky. The gold prices are platinum, precious metals prices are running. Financial markets are running. The dollar is a little bit weaker. Emerging market currencies are strong. Therefore, people are buying emerging market bonds, which have been yielding nice, chunky interest rates for
South Africa.
So fund managers have been piling into the bonds. Those yields have then, as a result, compressed, which means that the government can refinance its debt at slightly more attractive rates. So there's this kind of good story going on. But the underlying macro story remains one of very, very slow, call it stagnant, actually declining real per capita GDP, number one. Number two, a very hostile policy environment.
Yes.
So while we're seeing some tweaks here and there in some reforms, we've had the signing of the Expropriation Act. We have the attempted extension of BEE requirements on licenses, and trying to prohibit and restrict economic activity on the basis of race. We've got the NHI legislation, which is far-fetched as the National Health Insurance
Don't worry,
is.
that's not going to happen.
Well, it might not happen as it's legislated, but even getting 20-30% towards some kind of system like that can be very harmful and damaging. So these are some of these underlying structural trends. And I just any further comment on that you might have on what we're seeing at the moment. Is it, how durable is what's going on?
Well, you're talking about better. The numbers are not better. It's slightly less bad. I think that's a better way of looking at it. Now, fiscal deficit, the debt numbers, let's not bore people too much by the debt numbers, but it's been going up, and it's been going up for many, many years. It basically doubled in a period of about, relative to GDP, in a period of about 10 years or so. And you can't just keep on borrowing, because the day's going to come when the bank's going to knock on your door and say, listen, I want my money back. Or then the buyers of the bonds. And remember, there's X amount of savings available in an economy. And if the state takes all the savings out of the economy, there's less money available for the private sector. The state basically crowds out the private sector. And that's a very important reason why long-term interest rates are relatively high in the economy. What is also important to understand is who's funding the state, who's funding this monster called the state. And there are a couple of funders. Typically, domestically, the funders are pension funds or the savings industry, and of course the unit trust industry, for example.
Banks to some extent. Yeah.
And the Reserve Bank is getting quite concerned about how much the banks are funding the state. And and internationally, of course, there are a bunch of funders as well. If you look at the total rand-denominated debt, approximately 20% of that is funded from investors abroad, mostly from Europe and mostly from the United States. And that's the real big stick that can be used against South Africa. What I'm concerned about is exactly that. One day the foreigners are going to say, or Donald Trump's going to say, you're not allowed to buy the South African bonds anymore. But again, let's give credit where it's due. Typically what happens with emerging economies like South Africa is they start borrowing a lot of dollars, and then they start splashing these dollars, start spending their dollars, and they run out of reserves to repay those dollars eventually. Argentina is a very good example of that. That hasn't happened in South Africa. We recently, relatively speaking, increased our dollar-denominated debt, but not by too much. The dollar-denominated or foreign-denominated debt is approximately about 13% of total outstanding debt. So fortunately for us, and we've got more than sufficient reserves at the Reserve Bank to pay that off. So that's one way, that's something that I think the Reserve Bank has been very good at the last couple of years, making sure we've got sufficient reserves.
And talking about that dollar debt is important, and I think it leads us onto our next point of discussion, because I want to talk about this concept of fiscal crisis and what a fiscal crisis means and what it looks like. And now, one of the ways that emerging markets can get into a fiscal crisis, there's a few ways. One of them is it borrows too much foreign currency, and then as its own currency weakens through mismanagement of the domestic economy and domestic monetary policy and so on, it becomes more and more difficult to pay back that foreign currency debt because you've got a weakening currency, and you can get into a real debt crisis like that. As you say, it happened in Argentina. This is in many ways how Zimbabwe fell over. It had huge dollar loans that it just simply couldn't pay, and then it started printing some dollars and couldn't afford to pay those sorts of loans.
The point you're making is you're asking the question. So we've got all this debt. So how do you repay the debt? And there are a number of ways through which you can repay the debt. The one is you can repay the debt. The other one is you can simply refuse to repay the debt. And
known as a default.
Yeah, it is known as a default. And a very popular way of repaying the debt is through inflation. Because inflation reduces the value of money, but it also reduces the value of debt. And that, of course, is hugely damaging to an economy. And just by the way, politicians like inflation for exactly that reason, because it makes their lives so much easier.
And you can diffuse the costs across the economy.
Nobody can see that.
Nobody can see it.
It's a tax.
Yeah.
Actually,
you print money, you pay it off, and everyone pays a little bit of that cost. Yeah.
And that's why it's so good that the Reserve Bank put a lot of pressure on the Minister of Finance to reduce the inflation targets. So basically, the inflation targets, where it is now at 3%, which I think is a wonderful thing, we have to reduce that down to 2% as well. But that's going to put pressure on the Minister of Finance to keep back on his own expenditure, making life more difficult for politicians to pay off debt via inflation.
Let me just emphasize that point. I think it's so important what you've just said. So many governments in the past have had a situation where fiscal excess has been encouraged because of irresponsible central bank management and currency management, where you essentially, to put it in simple terms, print the money that you need.
Yes.
And that just emboldens more deficits because it's such an easy financing mechanism. In the short term, of course, in the long term, it can be absolutely disastrous, create high or even hyperinflation. But what you're suggesting is that at the moment in South Africa, the causality is kind of a little bit going in the other direction, where there's solid currency management, the SARB keeping interest rates high enough so that we have high real interest rates, inflation adjusted. If you save money in South Africa, you still, give or take, getting a decent real return.
Yeah, exactly.
Protects the currency, but also brings inflation down. And as you say, just for absolute clarity for people, the inflation target in South Africa has now officially been reduced from a 3 to 6% target, which effectively was always closer to 6, down to now 3, with some tolerance around that as far as 2%. So there's a 1% tolerance around that 3%. In other words, the Reserve Bank's going to tolerate inflation falling to 2, and you're suggesting maybe the target could even then eventually be dropped to 2. And so that then is a very strong signal back to the Treasury that, hey, we're not a money printing central bank. We're not a deficit financing central bank. You've got to rein in spending on this side. So that's fairly healthy kind of macro management, all things considered.
But there's a price we're paying for that. Remember, if you want, okay, we've got a choice between two extremes here. you've got a choice between very high levels of inflation, and high inflation is bad for economic growth.
Correct.
And people must understand this.
I totally agree.
High inflation destroys economic growth because it distorts the signals in the economy. People think, obviously, there are many things why inflation is bad. It erodes your savings. It's bad for especially wage earners. We can know about
Things
all
get
those
more
things.
expensive.
But what people don't understand quite often is that high inflation takes that signals out of the economy, and you cannot allocate resources optimally, and high inflation always leads to weak economic growth, always.
Yes.
So it's a bad thing at various levels.
Yeah.
So you've got a choice between high inflation. You can get away in the short term, and it sounds good, and politicians would rather go for high inflation in the short term, but it's always bad for economic growth. But the price that we're paying in South Africa to get inflation lower means weak economic growth as well. Because if we increase interest rates, that slows down economic growth initially, and eventually as inflation comes down, we can let go on that one, and economic growth can accelerate as well. But the point I want to make is that the inflation that we have in the economy, and that's why it's so good to have low inflation targets, it's created. The inflation that we have in South Africa is mostly created by the state, by so-called administrative prices, by Eskom, by the local authorities, and by the Minister of Finance himself. Look, we've got a so-called rolling budget in South Africa, where we can see actually what the minister expects in terms of state expenditure over the next 3 years or so on. And his expected increase in state expenditure over the next couple of years is actually an increase of between 4 and 5%. So he's actually budgeting for an increase in state expenditure, and if he doesn't spend it wisely, that's going to lead to inflation as well. So I think, and that's the reason why the Minister of Finance was so reluctant to reduce the inflation targets, because it will put a lot of pressure on him as well. But yes, certainly, that is certainly something, a very, very big positive, reducing the inflation targets to 3%.
What happens in a fiscal crisis? We talk about this word fiscal crisis. Some people talk about fiscal cliffs. There's a moment that can happen in some countries where they run out of the ability to service their debt. They run out of money in some way. In terms of, and we're really talking about the governments. A fiscal crisis is first and foremost a problem of government finances. It doesn't mean that businesses are necessarily running out of money. It doesn't mean that productive people are running out of money. But there's a moment where something happens. Let's just sketch that a little bit, because typically how that manifests is the government gets to a point where it can no longer service its loans. It might have to default temporarily. Bond markets get into a bit of a panic, so a lot of investors will sell bonds. Interest rates will spike. But it's not just a trivial problem of government finances, because so much depends on government bond yields. Banks hold government bonds as equity and collateral and so on. So just a brief sketch of what a fiscal crisis can look like, and then how a government can respond to that, so that because you can get different responses. The responses can range from catastrophic to kind of fairly healthy.
Yeah, here's a potential scenario. Before I get to that, just for people to understand that when long-term interest rates or yields go up, the value of those instruments go down. So there's an inverse relation between the two. And that's why economists always refer to the yields on the capital market, because that's usually an indication of many other things happening in the economy. That's the first point. The second point, the state or government then, and we refer, in this case, we define government as national government. The state is by far the biggest economic player in the economy. So here's a possible scenario that what can potentially happen. Say, for example, the state owes a lot of money, they have to repay that debt, and there's what I've said earlier, is there's this the market wants to increase inflation, because that's one way of paying off debt. But many other things can happen. Say you owe a lot of dollars, for example, and a foreigner comes and says, listen, I want my money back, and you don't have enough reserves, then your currency is going to take a knock, your currency is going to weaken, also Argentinians, or many other.
Because you're going to have to take rands, you're going to have to go and buy dollars in the market to pay those dollar loans.
Or you take the dollars at the South African Reserve and can give it to them until you run out of dollars, and then you have to start buying dollars, and your currency weaken, and that in itself will lead to inflation as well. But here's a possible scenario. Say, for example, remember what I said earlier, about 20% of the rand-denominated debt is actually held by foreigners, mostly Europeans and Americans. Say there's a political event. So say if somebody says, listen, the Americans are not allowed to buy our bonds anymore, and they start selling even our local bonds, and they start selling our rand-denominated bonds, that will increase long-term.
That could be under some sort of sanctions regime.
For
or something
example,
like that.
long-term yields will start going up. Remember, our local banks, they hold a lot of bonds as well. So they, on their balance sheet, their yields go up, the value of their assets go down, and now all of a sudden the banks start getting into trouble because they do not have the value of the assets. They might still have the bonds are worth less now. And that means that the banks can eventually get into trouble, and that can lead to a really bad financial crisis.
We saw a little bit of this during the lockdown, the COVID lockdown period, Dawie. There was a big sell-off in the bond markets because there was a global liquidity crunch.
In fact, we had quantitative easing there.
Yeah, so foreigners were selling assets in places like South Africa to get their hands on cash and get their hands on liquidity. So bond yields rose very, very quickly at that time for a short period of time. And the banks came under real strain in South Africa.
But when, again, give credit where it's due. The South African Reserve Bank, and maybe the Reserve Bank is overdoing that, but the banks in South Africa are very well capitalized. So I'm not concerned about that. But that is a potential scenario. The bond yields spiking for whatever reason, and then it will put pressure on the whole financial system in the country, and that's going to be really bad for South Africa. And we're heading for that. If we continue like this, we're heading for a financial crisis.
Now, the way a government responds to a fiscal event like that, where investors are starting to lose confidence in its ability to repay the debt, and so yields spike, and you get maybe a recessionary period, and so on. And the government at that point has a choice. It's finding it more and more difficult to borrow money. So either it reins in spending and tightens its belt and actually lives within its means, and that's kind of
the good news scenario.
Yeah, that's short-term, a little bit painful, and because the government has got all these spending flows and it's doing transactions in the economy, and these things have to be scaled back. And so there's potentially even short-term recessionary consequences of something like that.
Yeah.
But the other scenario on the far other end is in places like Zimbabwe, where you resort to the printing press. Now, I think what we've already covered is that for now, the Reserve Bank is not a money printing, debt financing central bank. No. It's a well-managed central bank. But legislatively speaking, the pathway exists for the SARB to monetize debt, to print the money. There's actually no real legislative barriers there. The barriers are more policy, the relationship between the banks and the Reserve Bank. I always like to say that as much as the Reserve Bank regulates the banks have a check and a balance on the Reserve Bank as well.
Yes.
That's the kind of financial system we have to some degree. But the point is, the one scenario is actually a better behaving government.
More responsible.
Mm-hmm. So a fiscal crisis can lead to better outcomes.
Ask the Greeks.
So, yeah, I was looking at the Greek numbers, and Greek unemployment went from 8% through its recession and fiscal crisis to nearly 30%. Now that just sounds like a disaster, and it was very painful for the Greeks. That unemployment rate is back at 8% again.
Yeah.
So a country can live through a fiscal crisis,
and the financial markets can actually force the politicians to start behaving responsibly.
So that's kind of the good scenario. And so it's important for people to understand that, because when we think of this idea of fiscal crisis, the word crisis maybe is the wrong word. Maybe I don't know what the right word is.
Opportunity.
Yeah, maybe it's an opportunity. On the other side, though, you can get very bad management going on, where now you're no longer being lent to by conventional sources. You might turn to loan sharks, global loan sharks in a sense. You might turn to other sources of finance.
Or you can force your local guys to buy your bonds.
Yeah, so
prescribed assets.
Prescribed assets. So you just explain what prescribed assets would mean in that scenario.
We've seen financial crises that turned out relatively well in South Africa previously. Eskom is a good example of that, because previously the private sector was not allowed to generate electricity, and then gradually the limits on how much they can generate was increased, and now it's unlimited. So in a way, government is still, there wasn't a change of heart, there wasn't a change of policy, but the reality forced them to look at Eskom differently. The same is happening to Transnet now.
Force them to burn more coal as well instead of relying on only renewable sources.
Start accepting the reality for what it is and start adapting to that because you do not have a choice. But yes, there are many bad things can happen. The best thing to do during a crisis, of course, is to put the correct macroeconomic policies in place to make sure the economy grows faster going forward. Because everybody depends on economic growth, not only the private sector, the Minister of Finance as well. And we mentioned 1.2% what the Minister of Finance expects in terms of economic growth. And we all need to live off an economy that grows at 1.2%, and that is just not good enough. But there are many bad things that governments can do as well. They can start printing money, like you've said. They can force you or prevent you from taking your money out of the country. They can start borrowing from all sorts of institutions internationally, which will eventually lead to some sort of financial crisis in any event as well. But it can certainly be an opportunity. And we've seen some positives coming from that. I refer to Eskom and Transnet, for instance.
So let's look at what are the types of conditions. I think we've touched on a number of the types of conditions that therefore would make a country vulnerable, particularly vulnerable to a fiscal crisis. Number one would be something like high degree of foreign borrowing, dollar borrowing. That's not actually the case in South Africa.
And on top of that, we've got quite a lot of reserves as well.
Yeah. The other one that often pops up in fiscal crises is hidden debt that no one knew about, and then suddenly it gets revealed. This actually happened in Greece.
Yes.
Suddenly there was an extra 30 billion euros or something that no one knew about. For some reason that had been hidden. Now, South Africa is an interesting case. We have quite a transparent budgeting mechanism. I mean, so we think, so we hope. But we can see it on the books. By all accounts, we have a very transparent process. There is some hidden debt in the sense of contingent liabilities with state-owned enterprises and municipalities. But again, that's not a secret. Yeah. That's just, a lot of people don't see that, but smart analysts are aware of it and they take that into account. So it's not like there's necessarily lots of hidden debt, although on some of those contingent liabilities, there could be scenarios there that get quite ugly. Yeah. And suddenly there's a surge in the debt pile. So these are the kinds of things. The other sort of issue is regime instability, changes of governments, rapid political changes where a new order emerges and the new guys say, we're not going to pay that debt. Yeah. That's not our debt. Yeah. So those are some of the scenarios that you get. And then the other one, of course, is big global sudden stop crises, big financial crisis where foreign investors desperately need liquidity again back to shore up their own positions, and so they're selling bonds, they're selling South African assets, currency weakens, bond yields have to spike, and suddenly then, because of very high yields and a weaker currency, the country starts getting into a bit of trouble. So these are the sorts of conditions that can precipitate crisis. And I think what we've just sort of covered is that on the whole, in terms of how South Africa is managing its monetary and fiscal policy, it's doing about as much as it can to forestall that sort of crisis. But what it can't control is the global environment. It can't stop a global crisis from happening. But the other thing that we're not able to stop at the moment is harmful socialistic policies that can create the sorts of conditions that investors become very nervous about, and that actually, in fact, harm economic growth considerably. And we look at some of these things like the recently signed Land Expropriation Act, or the Expropriation Act, that permits expropriation without compensation, the undermining of property rights, the extension of the employment equity rules to very, very draconian race-based quotas that make doing business just increasingly and incredibly difficult. And one thinks back to a place like Zimbabwe where there were extreme land invasions. I mean, we don't foresee that level of extremity in South Africa, but what happened there was the core of the economy, which was farming, which was the agricultural economy, had its legs cut out from under it.
Destroyed, basically.
And that then precipitates, all these problems. So just some of your thoughts around how one potentially goes into a crisis state as South Africa with bits of the macro management that are actually really sound.
I worked at the South African Reserve Bank and analyzed the fiscal accounts there, and after that I've always looked at the budget, and I I think I've been doing this for decades, literally.
Yeah.
I've been doing this for nearly 40 years now. Every year I've been analyzing the budget, and I am pretty sure there are no surprises there. Yeah. It is very transparent. We all know what's going on. Something that's very good about South Africa, we've got financial markets that are very liquid, very well regulated, and the financial markets in the end are the judges. The financial markets will really wrap you over the knuckles if you step out of line. And we've seen that, in fact. And the bond yields in South Africa are relatively high. So we're paying a high premium, we're paying a price for the fiscal accounts that are unsustainable.
Even though those yields have compressed a little bit, yeah, but they're still, all things considered, they're still quite high. There's that premium still sitting there.
Quite high. An international crisis, that can always happen, and I must tell you, I'm quite concerned about that. If you look at the valuations on the equity, especially in the big markets, like, for example, the American equity markets, they are, I'm getting it, eye-watering high, those valuations. And if there's a big correction, but it happens, that's natural. That's part of the cycle. Markets go up and down. Better be prepared. We're not that well prepared.
The last major crisis was, I suppose, a very big one in terms of pure financial market crisis was 2008.
Yeah.
And there were several countries that had fiscal crises in the wake of that. Greece was one of them, but there were actually several more.
So we're quite vulnerable if that should happen because of things like the fiscal accounts and so on. But the single biggest issue, and you've touched on that, is that the things that we have control over is to make sure that we have the right macroeconomic policies, domestic macroeconomic policies that is good for economic growth. And we do not have those.
Don't undermine property rights.
They undermine property rights, and NHI, you refer to the NHI. And what I'm very concerned about is the efficiency of the state. The state has become, people want to work for the state. Ask young people, they want to become civil servants, because civil servants, as a rule, not all of them, are hugely overpaid and hugely underworked. And civil servants, I'm talking about all of them. The local authorities, state-owned enterprises, people working for the various state departments and so on. We cannot afford this. We've got 2 million civil servants in South Africa. We've got 28 million people receiving grants from the state. Yeah. We cannot afford this. That is the reality. If your economy does not produce more stuff, you cannot have so many people that depends on the state. And now we can go through who's paying the taxes. Now, I've done the calculations. There are two ways of you and I that we can be affected by the budget. And that depends on how much we pay to the state, to the budget, to the Minister of Finance, by way of the various taxes. And personal income tax is the most important one. And there's a tiny number of people that pay the bulk of personal income taxes.
Yep.
And then, or you can see what you get from the state. And typically you get state in the form of you get something from the state in the form of certain services, or you're an employee of the state, or you're grant recipients, or whatever the case may be. And the fiscus in South Africa is dramatically redistributional.
Yes.
I've done the calculations. The South African fiscus is perhaps the most redistributional fiscus in the world, which means that there are many tens of millions of people that depends on the state, and the state depends on a growing economy. And if the economy doesn't grow, tens of millions of people everybody will be affected by that. Yeah. And if you look at the macroeconomic policies, it is not good for economic growth. If we don't make some significant changes in terms of macroeconomic policy, we're not going to get this economy to grow. And I would go as far as saying, as long as the ANC is part of the political setup in South Africa, we're not going to get the right macroeconomic policies, because the starting point is wrong. And the starting point is the wrong ideology. They believe in the wrong things.
Explain that a bit more.
What I mean by that, it's actually quite interesting to go into history here. But the ANC started 100 odd years ago, and they started at the time when the world was basically split in two parts, ideologically. The one was the interventionist socialist part, let's call it the East, and the other part was the more free market, individualist kind of part, where you believe in a free market kind of system. Let's call it the West, if you like to. And there are reasons why the ANC decided to go for the left wing, or the eastern side of the world. And the part of that had to do with colonialism, had to do with apartheid then, had to do with that sort of stuff. And they decided to follow the ideology which was basically rooted in the value labor theory of Karl Marx. He created, and it makes sense if you understand that. And in a way, you can have sympathy for that. And the reason why is because if you go back 150 years ago, look at the economy. The economy was factories with people with blue overalls and greasy hands, and they're really working very, very hard. It was tough. It wasn't easy then. And that's where the ideas, now not that I agree or disagree, that's not the point, but that is what it looked like then. That's not the modern economy anymore. A modern economy, there are still people working in factories, but they wear white shirts and they walk around with clipboards, and they're IT managers and they are artificial intelligence people. So the environment is completely different. But the ANC is still rooted in that ideology based on Karl Marx's labor theory, labor value theory. And that's the reason why they have the Communist Party is still part of the ANC, the COSATU is still part of that. So the starting point is wrong. And as long as the ANC is part of that, the ideology prescribes certain policies which are wrong. And on top of that, we've got things like cadre deployment, and another word for that is incompetence. You employ or put people in positions because they're loyal to the party. And on top of all of that, you've got very high levels of corruption. The ANC is not part of the solution. The South Africa, I don't think we've got major economic problems. The problem is political. And if we don't fix the political problems, we're not going to fix the economic problems. So I'm afraid to say, as long as the ANC is part of the mix, the political mix in South Africa, we're also not going to fix our economic problems. That's where we need to start.
It's interesting because some people, I agree with that, and some people of late have tried to talk up the idea that there's reform starting to happen. And while there is some tweaks at the margin to get, the collapse, frankly, of Transnet is starting to be revived a little bit through some better management, I guess. There's maybe some light at the end of the tunnel for the ports, the harbors, but that's not totally clear yet either. The electricity has certainly been a much better story, coming from a diabolical story before. So now we get back to a situation where broadly the lights are on, and that's a good thing. But if you look at so much else from a policy perspective, the transformationist push, which is redistributionism, basically kind of on steroids, and you see that in the fiscus, and this actually marries the point between this Marxist kind of ideological background and what you actually see in the fiscus. And I'm glad you pointed that out, because it's something I've been thinking about for a long time. Is, people keep saying, but there needs to be redistribution, there needs to be redress, there needs to be all these things. Our fiscal system is precisely set up for that. Massively, and has been so for 30 years. Yeah. And maybe one of the conclusions from that, to the extent that there's still high unemployment, lots of poverty, lots of unhappiness, is that maybe radical redistributionism doesn't actually work so well. And what you really need is to create the kinds of environment where you get strong economic growth, broad and sustainable growth that actually sees business formation, sees capital investment, draws people into the labor market. And so until we see that fundamental shift, it's hard to see any of these recent recoveries and talk of reforms and so on as anything more than quite cosmetic.
But you touch on a very important point here, and that is that if you ask, one of the so-called biggest problems in South Africa is that we've got these high levels of inequality, and that is true. We have high levels of inequality. And if you ask people with the ideological mindset of interventionism or socialism or whatever, and you ask them, how do you fix a problem of inequality? The answer is always, we have to tax the rich more. So you fix inequality by doing this. But you can fix inequality by doing that as well. But we're not doing that. We're not making poor people rich. With what we're trying to do, we're trying to make rich people poor. And the rich people that become rich doesn't mean that other people become poor. In fact, rich people becoming rich usually means that poor people become wealthier as well. But the high levels of tax on the rich in South Africa and the inefficiency of the whole system means that we are losing our rich people. We are losing our productive people. We're losing the potential employers and taxpayers.
Taxed like a developed market, but receive the services of a developing market. And that's not a sustainable equation. But to your point, I just want to latch on to that. This idea that to close the deficits and to keep things sustainable, that we now need to actually raise taxes. This is an idea that keeps coming up every budget. Oh, there's a gap, and so I guess we need to raise taxes. There's never a thought of, hang on, this government is spending wildly too much, and it needs to actually spend less because there's no more space to raise taxes. Let's talk about, just briefly, the VAT episode this year, which I think showed, I mean, whatever the politics around it was, that there is virtually zero tolerance. There's virtually no more space
To increase taxes.
People are absolutely squeezed in that respect. And therefore, any talk of trying to close these gaps through meaningful tax increases as opposed to proper fiscal discipline and a shrinking of the excesses of the state, any talk of tax increases is surely crazy.
Can I just make a point before I get to that? And that is about the rich people, taxing rich people too much. I want to make this statement. It is impossible for a rich person to hide his or her wealth. It is impossible because a rich person will take this money and do something with it. You will put it in a bank, resulting in lower interest rates, getting the bank's money, allowing people to borrow that money from bank.
The savings of wealthy people becomes the lending for
it's impossible
entrepreneurs.
to hide your wealth. It is impossible to hide. You must share it by putting it back into the economy. You do not have a choice.
They don't put it under a mattress.
They don't.
Yeah.
They somehow mix it. Even if you put in a golden toilet, somebody's got to put in the toilet. You have to dig the gold out of the ground. But you have to share your wealth. It's impossible not to share your wealth. Coming back to the various taxes. So there are a couple of taxes. The most important tax is personal income taxes. We cannot increase personal income taxes anymore. That's roughly about 40% of the total tax stake. And the reason why I say that, it's because of the so-called Laffer curve. If you increase taxes more, you actually collect less. And that's why SARS is not trying to increase the tax rates, but they're putting all this pressure, on this huge pressure on individuals to take as much taxes out of them, because we are already over the Laffer curve. People aggressively try to structure their tax affairs or even stop working in some cases. So personal income taxes you cannot increase anymore. You cannot increase company taxes. That's the third most important revenue source, and that's roughly about 20% of total taxes. You can't increase that because our company taxes are already high.
Already high, globally uncompetitive.
And remember, companies do not pay taxes. Companies always shift their total tax burden down to you and I. So it's only people that pay all the taxes in the end. So don't think if you tax a company that you're not going to get taxed. You are getting taxed indirectly. The second most important tax, and that's roughly about 30%, is value-added tax. That's an indirect tax. It's a very unpopular tax. And that's the only potential tax that we can increase to get more money out of the system. And that's what the Minister of Finance has been trying to do. Instead, of course, the right answer is to cut back on spending, not to take more money out. And the really interesting thing is about, if you see what happened in budget number 1 and budget number 2 and eventually budget 3 this year, and look at the quality of South Africa's political leadership. It's not only the ANC, it's right across the board. I mean, our political leaders don't understand the fiscal numbers. They don't understand the economy. I would go as far and say that the morality of our political leaders is really under question here as well. Because I think our political leaders think that we are stupid. Because, I mean, look at the second budget. All those political parties voted for an increase in VAT, and afterwards they said, no, but they're against the VAT increase. I'm sure, come on.
I mean, some of them, I'm not even sure they knew what they were voting for. It seemed like hugely confusing. But the big point here is that a 2% VAT, a 2 percentage point VAT increase, therefore, instead of it being 15%, let's say 17% on top of products or services or what have you, in the big scheme of things doesn't sound like a lot, but in a country that is so heavily taxed already, that is spent in terms of taxes, it was kind of the last straw, and it created this very, very big backlash. And it just shows you that Laffer curve principle
applies to VAT as well, by the way.
And is very much in play.
And here's an interesting one. So if the Minister of Finance should decide to increase VAT, that will mean prices will go up. Prices go up, that means the Reserve Bank will increase interest rates. So people think that we blame the Reserve Bank for high interest rates, but that's not. This is an example where by increasing taxes, you can actually lead to an increase in inflation and in high interest rates. So no, I don't think there's going to be a VAT increase. I think politically it's very difficult to do. And like you've said, we've reached that point now where we need to do something about the expenditure side.
This also has relevance for the NHI, because we've mentioned that we don't think the NHI is a realistic possibility, and one of the reasons is because it would require enormous tax increases.
Massive amounts.
Our own estimates, which are more on the conservative side, for our litigation against the NHI, we've looked at the NHI costing somewhere between 8 and 900 billion rand a year, but it could actually be a lot higher than that. Some estimates are sitting at 1.5 trillion rand a year, some at 1 trillion rand a year. Whichever estimate you kind of pick, and there's different assumptions that go into those, the funding gap based on what we currently spend on the healthcare sector from the state side, but also on private medical aids, is just huge. And that can only come from increased taxes or more borrowing, which there's not space for and not appetite for, or printing money, which is going to be a disaster. So really it's a tax story, and there's no space to increase taxes. And the finance minister is basically saying this, as if I read between the lines, the finance minister is telling the Department of Health,
forget about it.
There's no money. There's no money for it. They're not saying it totally explicitly, but if you look at the medium-term budget forecast for healthcare spending, there's no provisioning for NHI spending.
That's going to happen.
So in the budget forecasts, the Treasury is basically saying to the Department of Health, guys, this is...
What concerns me, there is an amount of money that is being spent on a so-called NHI, but it's not much. I think it's about 20 billion or so annually, and that money is not very well spent. I mean, that money we could have spent somewhere else much better. So they're going to keep on trying, but it's not going to become a reality because we just do not have the money.
The litigation that's mounting up against the NHI is substantial. We've brought a case, but we're one of 7 or 8 major litigants. So this is in now a very, very big litigation process. So there's the legal angle, but there's also the reality angle of just not being able to fund this thing very, very easily. Dawie, let's bring this into land. You've given some fantastic insights. You work in the wealth management industry and the fund management industry. What are you seeing from your corner of the world in terms of how people are reacting to both the cycle that we're in, which is there's an upcycle going on, some improvement in growth and so on.
Nice commodity prices, gold price.
Gold prices up, good for South Africa, but against this backdrop of difficult, restrictive policy and so on. For a long time, you probably have been seeing clients wanting to take their money out of South Africa. Are you seeing perhaps a meaningful reversal, even if it's a short-term reversal in that? Are people wanting to, they see dollar weakness, they see things improving here? Is that evidenced? Is there some reversal in that externalizing trend?
Can I tell you, when somebody walks into my office, there are two things they always tell me. The first one is, I don't want to pay tax. I don't want to take my money out. Those are the two things. And we've spoken about the tax part, and so people are really, I mean, the tax burden and how aggressive SARS has become, that's something that is not good. It's not good for the country. But you're right. What we have seen recently is the rand appreciating quite nicely, the dollar under some pressure. But we also must understand that South African assets, financial assets, are very attractive. The bond market yields that still, even after a nice run, the bond market still offers a really, really attractive yields. Now, look at a foreigner.
And you're lending to a government that's not going to default on its debt in the foreseeable future.
Very unlikely.
Fiscal crisis maybe down the line through catalytic events, but steady as she goes for now. And so those bond yields offer attractive opportunities to get 8, 9, 10% yields.
Imagine you're a guy sitting on Wall Street and you want to have a quick bite out of a very juicy apple. This is what you have. You've got a currency that is still undervalued, the rand. So your entrance into South Africa is a cheap entrance. Secondly, you buy in a very liquid market. The South African financial markets are very liquid. So you can move in and out very quickly. And thirdly, you buy into a very, very juicy yield. I mean, this is a sitter, South Africa. And just see what's happened recently. The rand appreciating nicely, the equity market, okay, that's some international markets going up as well, but the bond market doing very well as well. Imagine if we've got a government with the right macroeconomic policies. Imagine they actually start implementing the kind of stuff that the markets like, investors like, that will lead to stronger economic growth. Just imagine just saying that, what's going to happen on the bond market. Just saying the right sort of things. What's going to happen to the rand? What's going to happen to the equity markets? I can tell you this easily, another 200 basis points, 2% potential fall in the yields on the capital market if you just say the right stuff. And of course, that will eventually spill over into the real economy as well. But we have in the meantime as a government that wants to expropriate property. They want to, let's use the right word, wants to steal private sector properties because that's what they plan, that's what they said they want to do. And maybe I can just make a comment about agriculture. If you look at the nature of economic activity, the nature of economic activity has shifted from the primary industries to the service industry, to the tertiary industries. The tertiary industry is stuff that happens in the cloud. People create all sort of values, and the financial industry is a good example. Googling is stuff that's happening in the cloud. That is where economic activity is happening today. It is not happening in the primary industries. But the primary industries today are also service-driven. So it's not the land that matters. It's what you do with the land that matters. And you can think of any career, any job, you will find that in agriculture as well. You can be an IT expert, you can be a drone expert, you can be a financial guru, you can be a psychiatrist, you can be anything and find that in the agricultural sector. And that's where our political leaders misunderstand the nature of economies. And that's why they're still rooted in just after the Industrial Revolution, thinking people are working in factories with greasy hands. That's not where real economic activity is happening. It's happening in the cloud. And it's not the land that matters, it's what you do with the land. If you really want to get people to get involved in agriculture, teach them to become financial gurus. Teach them to become agricultural economists, for example, or personnel managers or whatever, because all jobs, you will be able to find that in the agricultural sector. Instead, what do we want to do? We want to create subsistence farmers. Nobody wants to be a subsistence farmer. It's unproductive, it's backbreaking hard work, it's not easy. There's no way a small farmer can compete with a big industrial farmer. You can't do that.
And I think that's even being charitable to the states. I think a huge part of the Expropriation Act is really to allow the state to get more of its hands on property, for the state to control property more than the private sector, which feeds into this Marxist ideology of centralized control. And so this is a huge part of what they're
That's
doing.
why I say the ANC is part of the problem, because the idea, it's a belief. An ideology is like a belief. It's like a religion. I believe in something, and it doesn't matter how much proof I have that it's wrong or whatever, I'm going to keep on believing in that. And the only way we can fix this is for the ANC to have some sort of Damascus, let's stick with the religion, Damascus experience, which is unlikely to happen, or to get rid of the ANC. That's why I say the ANC is part of the problem. And if we don't get rid of the ANC and get rid of this destructive ideology, we're not going to get this economy to start growing faster.
As we bring this to a close, Dawie, what are the sorts of things, we've spoken about the fiscal numbers, the economic numbers, what are the sorts of fiscal, economic and policy factors to pay attention to in your mind to monitor this situation, as it were, going into 2026 and beyond? What are some of the evidence that this fiscal story is actually a decent story, that there is sustained reform versus just a short-term thing? And I guess it's keeping an eye on some of those headline budget numbers, keeping an eye on some of the economic numbers. But what would you be looking at? What would you be talking to clients about?
The capital market is the biggest market. I love the capital market. I love people. We don't give enough attention to this. And perhaps it's the fault of economists that we have to explain this to people, to say, have a look at the capital market. That's the thing. That's the thing that really, that capital market, everybody's scared of the capital market. So if there's one number that I certainly will keep an eye on, and I do that all the time, is to see what yields on the capital markets are doing.
So bond yields, government bond yields, but also corporate bond yields.
Some other numbers as well.
Bank.
But the bond yields, that's the one that tells me just about everything. And with that, some other numbers as well, the exchange rate of the currency, for example. That's also a very important number. But of course, as economists, what we do, we analyze the deficits. The deficit need to come down. It is too high. We need to bring the deficit down in line with economic growth.
And substantially down. I mean, it's currently 350 billion rand, forecast to only drop to 300 billion rand next year. Needs to drop much faster than that.
But more importantly, it's not actually the fiscal numbers. More importantly is policies in order to get the economy to grow. And then we can afford it. We can keep on borrowing. We can borrow 300 billion or 400 billion. It doesn't, of course, it needs to be well spent. But if you've got a growing economy, you can afford these sort of things. And we do not have that. And it's unlikely that we will have a strongly growing economy soon.
And it's that policy environment that Sakeliga is spending a lot of time pushing back against and challenging through substantial legal action. We're currently running about 8 major concurrent cases. We're launching our case against the Expropriation Act in the next few weeks, and in the early part of next year, that's going to increase to about 12 concurrent court cases. We're pushing back on harmful extension of BEE policies. The NHI is one of them, and several other very, very important cases. The Employment Equity Act is another one that is forcing businesses to run their hiring off a race-based spreadsheet, which is just totally unrealistic and can't work. So that is what Sakeliga is doing. Dawie, it's been absolutely fantastic and incredibly insightful to join you here at the lovely library at the Pretoria Club, a wonderful venue. And I wish you all the best as we navigate the next 12, 18, 24 months of this very interesting environment. So thank you so much for your insights.
My pleasure. Thank you, Russell.
Dawie.